Let me introduce myself. My name is Claudia Belenica from the Accounting Study Program. Here I want to explain the procedures for analyzing financial statements. Financial report analysis is an activity carried out to identify, assess, process and compare the information contained in a financial report. Analysis of financial reports is very crucial so that business or company financial data can be used to support decisions taken by both management and external parties who have an interest in the company, such as 1. Company manager. 2. Capital market investors. 3. Company employees. 4. Credit provider. 5. Internal and external auditors. 6. Regulators. Preparing financial reports and analyzing them is certainly not done haphazardly. Analysis needs to be carried out carefully and thoroughly so that the information provided is precise and accurate. So, the way to carry out financial report analysis is as follows. 1. Understand the business environment. The first way is to understand the company's background well. You must understand well all the products offered, how the business model is used, what sales system is used, how the company keeps bookkeeping records, and other things. This is not done without reason, but so that you understand how the company operates. Not only that, it is also easier for you to understand the company's cash flow, which makes it easier for you to calculate, create financial reports and carry out analysis of these reports later. 2. Read and study financial reports. Apart from knowing the company's background, you also have to know what factors influence the company's financial condition. These factors include the amount of tax that must be paid, inflation that occurs, interest rates, changes in management, and other things. Not only that, you also have to pay attention to aspects of technological progress and industrial development. The reason is, the business sector is now very dependent on these two aspects to remain able to survive amidst intense competition. 3. Review financial reports and assess earnings quality. After making a financial report, don't forget to review the report. There are several things you can do when reviewing a company's financial reports. For example, whether the company's financial reports comply with the rules set by Financial Accounting Standards or SAK. Then, whether the numbers written in the financial report are completely correct and accurate, as well as how the financial report was prepared by an accountant. The reason is, making financial reports manually is very risky of errors, especially in the calculation mechanism and data accuracy. This is why analysis of financial reports needs to be carried out. Some companies make financial reports directly internally. However, there are also companies that use services or third parties, namely consultants, to prepare financial reports. 4. Conduct ratio analysis of financial statements. Next, carry out an analysis of the financial reports that have been prepared. There are 4 ways to analyze financial reports, namely 1. Horizontal and vertical methods. This method compares financial data for the most recent year or the current year with data from the previous year. This analysis method is also known as trend analysis and is often used in monetary matters. 2. Common size method. Next there is the common size method, which presents financial reports with a presentation concept. Usually, the exposure made is related to aspects that are considered important in large amounts, such as sales in the profit and loss statement or assets in the balance sheet. 3. Comparative or comparative method. Then, there is also a comparison method, which is carried out by comparing the current financial statements with the previous year. That way, companies can compare each financial item accurately. This method is also called ratio analysis. 4. Time series index method. Lastly is the time series index method, which is done by creating financial reports as a base year index. Generally, the specified base year is written with an index of 100. Each method of financial report analysis certainly has its own weaknesses and advantages. You only need to adapt it to your needs and the type of company financial report you are applying, whether profit and loss report, balance sheet, cash flow, changes in capital, or notes to financial reports. 5. Predict future profits. After carrying out the analysis and successfully finding problems in the company along with strategies as solutions, write all these things as a conclusion. Later, this conclusion can be used as a reference when you have to make the latest financial report.